$55. That was the high. Today, we are staring at $2. If you are holding Polkadot, you are likely down 90% or more, and the market is screaming at you to capitulate. The sentiment is not just bad, it is catastrophic. But while retail investors are panic selling at the exact same price Polkadot launched at on Binance years ago, the on-chain data is telling a completely different story. We have a massive divergence between price action and development reality. We're sitting on a 2-week chart setup that looks terrifyingly similar to the pre-bull run accumulation of 2020. But there is a catch. We are dancing on a razor's edge support level. If this breaks, it is lights out. But if it holds, the upside potential is mathematically absurd. Today, I'm showing you why I'm dollar cost averaging into this fear, my exact invalidation level where I'll cut my losses, and the data that suggests the second age of Polkadot is not just marketing fluff. Let us look at the cold, hard reality. Price is hovering around $2. We are sitting at all-time lows, fighting for our lives in the $2 support zone. This is a ghost town compared to the hype of the last cycle. If you look at the user metrics, it paints a grim picture initially. We have seen active monthly users drop to around 85,000. Compared to the Layer 1 giants boasting over 40 million users, Polkadot is capturing just 0.1% of the market share right now. That is the bearish argument, and it is a valid one. The chart has been bleeding out, rejecting every single rally attempt since January. But here is where the smart money pays attention. While the price action is screaming dead project, the infrastructure volume tells us something else. We are still seeing over $120 billion in token trading volume over the last year. That ranks Polkadot 16th in the entire industry, above massive hyped projects. The market has priced DOT as if it is going to zero, yet the volume and the Treasury data, which I will show you in a second, suggest this is a massive mispricing event. The crowd sees a dying chart. I see a coiled spring sitting on historical support. But we need a catalyst to trigger the reversal. So why buy a coin that everyone hates? Because vision without engineering is just aspiration. But Polkadot is currently an engineering beast. Parity Technologies just released their blueprint for the second age of Polkadot. They are not forecasting the future, they are building it. We are moving toward the Jam upgrade, a verifiable compute layer that solves the fragmentation issues that have plagued this ecosystem. They are pivoting to a developer-first smart contract environment. And the developers are actually there. Despite the price crashing, ChainSpec data shows Polkadot is sitting at number 2 in the entire crypto world for developer activity, with nearly 9,000 developers and over 670,000 commits. Only Solana is ahead in developers, but Polkadot is crushing almost everyone in code commits. You do not get that kind of activity on a dead chain. Then look at the Treasury report. While other projects are running out of runway, the Polkadot Treasury assets hit $114 million. They have an unprecedented $80 million in pure liquidity. They are shifting from growth mode to operational discipline, injecting over $8 million directly into DeFi liquidity. We are also seeing real-world traction. Acurast, a decentralized compute network on Polkadot, is now processing over 1.3 million transactions daily. This is not bot spam, this is real activity running on real devices. Plus, Mythical Games is sweeping awards for Best Mobile and Casual Games for 2025. The ecosystem is alive, the war chest is full, and the tech is upgrading. The fundamentals are screaming growth, while the price is screaming bankruptcy. That is the divergence we trade. Now, let's get to the charts, because this is where the money is made or lost. I'm looking at the 2-week time frame. This is a macro view, because at this stage, the daily noise is irrelevant. First, look at the trend structure. We are trapped under 3 distinct descending trend lines, marked by those orange dotted lines on my chart. The first one comes from the local top in December 2024 at $11.60. We briefly broke it in August, but, and this is critical, we failed to hold. We got rejected exactly at the 236 Fibonacci level around 420. That failure sent us spiraling down to where we are now, forming a second, steeper trendline. We are currently testing the original trendline again, but this time from the underside, acting as resistance. To make matters worse, we have a massive third trendline descending all the way from the all-time high of $55. Polkadot has to cross 2 heavy trendlines and bounce from this $2 floor if we want to see $8 ever again. Let's talk levels. I have anchored my Fibonacci retracement from the $11.60 top down to the current low of $2. The levels are clear. The first major resistance is at $3. If we clear that, The 236 fib is at 420. This aligns perfectly with the volume profile point of control. That $4.20 level is a magnet. There is so much volume traded there that price will likely be pulled back up to it. Indicators are giving us a glimmer of hope. Look at the Heikin-Ashi RSI at the bottom of the screen. It is completely oversold. But look closer. I have drawn two descending trend lines on the RSI itself. Notice the white circle from October 2023? When the RSI broke that trend line to the upside, price rallied 200%. We are currently right below a similar RSI trend line. We need that breakout. If the RSI crosses up, history tells us a massive move follows. Moving averages are bearish. We are below the 10, 21, 55, and 100 EMAs. We are swimming against the current. However, that is usually when the best reversals happen, when everyone is convinced the trend is permanent. Here is my personal strategy. I have been covering DOT for a long time, and I have been accumulating. My load zone is strictly between $2 and $3. That is the green box on the chart. I'm dollar cost averaging here heavily. Why? Because the risk to reward is skewed. However, I'm not blind. I have a hard stop loss at $1.90. This is the red dashed line. This level is just below the original launch price on Binance in 2021. If a weekly candle closes below $1.90, the structure is invalid. It means the floor has collapsed, and I will exit my short-term positions. I'm not catching a falling knife forever. But if we hold this $2 zone, my take-profit targets are set. I will be trimming heavily at $4.50, then $6.70, and $11. If we enter a full-blown mania phase, I have moonbag targets at $17 and $26. I use trailing stops once the first target is hit to lock in gains. While we wait for the setup to play out, you need to be smart about your idle capital. You should not just let these tokens sit there. You should be utilizing DeFi protocols to earn yield while you wait for the pump. If you want the complete breakdown of this strategy, I have compiled all these tactics in my DeFi guide. It covers the exact platforms and security practices I use. It is available in the pinned comment for just $4.99. It is the cost of a coffee to potentially save your portfolio. So, what is the game plan? We are in a binary situation. It is do or die for Polkadot. The fundamental second age build plan and the massive treasury provide the long-term thesis that this project is here to stay. But the technicals demand immediate strength. The risk is a break below $1.90. If that happens, we could see a flush to $1 or lower. The reward, however, is a reversion to the mean. Just getting back to the volume point of control at $4.20 is a 100% move from here. Getting to the 618 fib at $8 is a 300% move. I'm betting on the engineering. I'm betting on the developers. I'm betting that $2 is the psychological floor where smart money steps in.
To wrap this up, the future is not something you predict. It is something you engineer.
Polkadot is building the roads, while everyone else is looking at the price of the toll booth. I'm placing my bets at $2 with a tight stop loss. If I'm wrong, I lose a little. If I'm right, I win big. That is trading. If you found value in this deep dive, smash that like button and subscribe. For faster updates and to see exactly when I pull the trigger on these trades, join my free Telegram group. The link is in the pinned comment. I have also covered the NEAR ecosystem recently, which is a big competitor here. So check that breakdown on the screen right now to compare the two. Thanks for watching. Never financial advice, and I'll see you tomorrow in the next one.